you may or may not already have known, our team is built up of three different divisions at our company, and this is just an introduction to give you an idea of what kind of an organization you're dealing with. And this, of course, is our second year working with you, but we have a business insurance or a commercial division insurance group. Our team, which is a Taylor, myself, that has been assigned to your account, is the benefits and financial services division, and we also have a personal insurance division that helps out with homeowners and auto type coverages and boats and fun toys that we call that you have available to your families. So just to highlight that, as you see here on the financial services division team, Taylor and I are going to be the main two contacts for you, but you're also going to have two internal contacts that are going to be available at any point in time to contact, and those are Laura Zanaco and Colleen Schreiker. So they're going to be, again, available on a daily basis, and I always recommend to everybody, if you have any questions throughout any time period, whether it might be claims issues, billing issues, or anything at all, our team is here to help you. And you can contact any one of the four of us that you see there. Laura and Colleen are going to be in the offices on a much a daily basis, while Taylor and I typically are in and out throughout visiting some of our existing customers and new customers. So as we had mentioned, the company is going to retain the medical insurance through Blue Cross Blue Shield. And we believe and continue to highly recommend Blue Cross, as they are in our minds, the top carrier in the country, and offer a great array of plans. In addition to that, they are a wonderful claims-paying organization, and that, I think, is probably one of the most important things for members to consider when purchasing health insurance, is that they know that when they have a claim that it's going to be paid and as fully as the plan has been designed to pay. So we're going to offer 6 plans, and those plans are going to be made up of 3 standard PPO plans, which most of us are used to seeing in the past. And we're also going to be spending a little bit more time highlighting the 3 health savings account PPO plan options as we did last year, and we will dive into those plans just a little bit further this year to help everybody understand how those plans work. And the company here has not made any decisions, of course, of which plan options you would like to choose. That's going to be your decision. However, as the industry keeps changing and changing, as the premiums continue to grow, unfortunately for all of us, more and more companies are trying to find ways of providing solutions that help curb or control the premiums more so. And then, of course, there are significant advantages on the tax side for the health savings account plans. And we will get to those in a little bit. So we're going to start out with just going over the benefit summaries of the existing plans that we're choosing to move forward with. And I'm going to have Taylor Krug go over those options right away. Thank you.
Good afternoon. This is Taylor Krug, Account Manager at J. Krug & Associates. We're going to briefly go over the plan options that are available to the Providence management team and families. If you are looking at this screen here, these are all of the plan options, all 6 on a side-by-side basis. If you're looking at the first 3 columns of plan options, you'll see the high-level brief summary of all the plan offerings that are available. As Logan had mentioned, there are 3 standard PPO plans and 3 HSA PPO plans, both on the largest Blue Cross Blue Shield provider network, large national network of providers. So you're being offered the largest carrier network in the nation. Just briefly here, the first line that you see on these plan options are what the individual deductible is for in and out of network. You'll see that on the right side, the out of network deductible is obviously a lot higher. Thus, we always recommend before seeing a provider to verify that that provider is considered in network. If you go out of the network, you will continue to experience higher claim dollars or claim expenses coming out of your pocket. With that being said, the main difference between the standard PPOs and the HSA PPOs is that the majority of the office visit, prescription copayments, emergency room copayments do not exist, as the insured would be subject to a deductible, and then the majority of the expenses will be covered at 100% thereafter. The benefit to an HSA plan compared to a standard PPO plan is the cost of the monthly premium, as well as tax advantages to an HSA plan option. And we will be going over the tax benefits to an HSA account following this slide. And if you are looking at the physician, specialist, and office visit copayments, you will see that those have a $30 copay for a primary care physician. That's typically your general physician practitioner. And then to the right of that is a specialist copayment for all three plan options. And a specialist typically will be your ologist, your ophthalmologist, your cardiologist, etc. Going further down, we now have the hospital inpatient coverage, which on the first plan option is a $300 copay, and then your deductible, and then after your deductible, you'll go into a cost sharing with Blue Cross. After your deductible, for this first plan option, for example, in all three, Blue Cross Blue Shield would pay 80% of future claim expenses over and above the deductible. And then Blue Cross, you, the insured, will pay 20% of that remaining claim. Going forward over to the three HSA plan options, you have three different deductible plan options, starting from the low, which is a $2,500 deductible for an employee only or an individual, and a $5,000 deductible for a family. On that third line item, you'll see a line that says embedded deductible.
In the embedded deductible, what you're going to see is on a standard PPO type plan, embedded really just means, and I have a slide that I'm going to hit on that in a little bit. The most important thing is that embedded means that it's each member has their own track, is the way I like to call it. So they're embedded in their own deductible that's embedded within the total family deductible. So that's what it's referring to when you see that as an embedded deductible. So just think of it as if you have a couple of members of a family, each member of that family has a, let's say for in the first column, they have their $1,500 deductible. And when you go into the HSA side, where you see a couple of them that do not have embeds, then the most important thing is that's considered to be a combined deductible. The combined deductible on the HSA side has to be met in its entirety first before you can move on to either the out-of-pocket maximums or you are done for the year.
These plans, you will have the opportunity to view the full plan summaries, which is approximately 10 pages long, on the enrollment software website, which we will be discussing later, where you can see all of the plan options, what the per pay period would be, contribution, employee contribution, what that would be on a per pay period basis, so that you, the employee, can make an educated decision and elect the plan option that would be most beneficial for you and family. Following this initial go-to webinar, we will be conducting 4 individual question and answer sessions throughout the next week and a half. At that time, you can ask questions about specific questions that you may have that you want to have answered prior to making the election. So we will be hosting those Q&A sessions to also help you better make an informed, educated decision. You also have the ability to contact one of our team members if you would like to ask a personal question that you do not feel liable or open to asking in a group setting. So those would be your options to make an informed decision. As Logan has mentioned, here are the definitions of what a combined deductible is versus an embedded. Obviously, a combined is one deductible for the entire family, whereas an embedded deductible plan would have an individual deductible for each family member. Therefore, with an embedded plan, if one family member has a bad year or a lot of claims, that family member will be reaching their deductible at a faster pace than a combined deductible. Obviously, with that being said, a combined deductible would be the largest out-of-pocket expense for a family. Also, as I had mentioned, we always recommend before seeing a provider, especially for the first time with that provider, you will want to make sure that that provider is in network. There are 2 ways to do so. You can review the provider search or physician search by going to www.bcbsil.com. And then you would want to follow the next 2 instructions on how to find a provider. The other method is to contact Blue Cross Blue Shield customer service, and that number is on the back of your card. So a couple options to verify. You also can call your provider's office as well as another method to verify that that provider is in network. Along with that search, you can also go on to what is Prime Therapeutics, which is owned by Blue Cross Blue Shield, and it's a mail order prescription drug service. This will also allow you to get an estimate of what a particular prescription would cost prior to making a plan election. Because on a standard PPO, as we had mentioned, there are prescription co-payments for prescription drugs, and it's on a tiered basis depending on what that particular prescription, which tier that would fall under. Whereas with the HSA plan options, the insured would be receiving a discounted price for that prescription. That prescription will then account towards your deductible and out-of-pocket maximum. So a very nice tool to use on My Prime, which is the website there, to minimize your consumer expense when purchasing prescriptions. Also available to an insured with Blue Cross Blue Shield is a 24/7 nurse line where you will be calling that 1-800 number. Typically, we find that insureds are using this on the weekend where their provider is unavailable to ask questions about a certain alien element. And typically, as you can see in the middle there, why you should call before going into services or before going to the ER. Emergency room visits and services are the most expensive claims for both the carriers and the insureds. So it is our recommendation prior to going into an emergency room for a common illness like ear infection or bronchitis over the weekend is that you call the nursing hotline, and they will advise you either where to seek services. They'll recommend maybe an over-counter prescription, or not a prescription, but an over-the-counter remedy. Very, very useful. It's just a tool for the consumer and the insureds to make right consumer purchases when it comes to healthcare. Another new and that is being a new service that is being offered to Providence Management's benefit package is a new resource called MD Live. MD Live will be able to take phone calls just like the nursing hotline. However, this MD Live was a purchase benefit with Providence Management to have this associated with your group health plan. The nice benefit to MD Live is you will be calling a medical professional, and they will have the ability, if needed, to call in a prescription on your behalf. So just like the nursing hotline, another great service, a value-added service to be a consumer and have the most beneficial benefits in place for Providence Management's employees. You may be asking yourself, how much would this cost be? And the answer to calling in for a consultation will be of no cost to the employee for that online or phone consultation. You do have the ability to actually have a Skype or a live chat where you can see the medical professional over your computer, your tablet, or your iPhone, or any other smartphone for that matter. So a great benefit that has been added for the Providence team. At this time, we're going to go over the tax advantages to, and specifically, what is an HSA health plan.
Thank you, Taylor. This is Logan again, and again, I will be working with everybody here on the health savings account plans. If I sound very passionate when I'm going through this, I am, and it is because I believe that these health plans and related financial tools are one of the best strategies that we have to help us all control our premiums in the best way possible. Being a former practicing CPA, if you remember from last year's conversation, I have had a lot of experience just dealing with the tax advantages and what these can offer to everybody, and I'm going to try to highlight those as much as I can to everybody to possibly consider this as one of your solutions. The idea of these is, as I had said originally, is that Providence has not made a decision to move forward with HSA only plans, but I can tell you that in the marketplace today, there are many companies that have moved strictly to the health savings account world as an option, And so we think it's a great idea to educate more and more of our clients, as we believe that down the future there might be a possibility just that the industry is changing towards these types of plans as being the mainstay instead of what we're used to with these standard PPO plans. So with Providence and our team working together on making the HSA offering even more beneficial, we have decided, or I should say the management team has decided, all employees who enroll in one of the 3 HSA compatible health plans, that the employer will match up to $25 per month into that employee's HSA account. And for families, they'll match up to $50 per month into an HSA account. So when you take your money out of your own let's say own pockets, we'll say, and you put that into an HSA account, and the employer then will match that, and that has to be what that is a gift. That's a gift from the employer. The employer is putting money into that account for you to use for future medical, dental, and vision expenses, which I'll get to in a little moment. But I wanted to bring that document screen up right away because I think it's an important screen for everybody to hopefully have more of an idea of what these work and see if they make sense for you. You may see a couple of the screens that you've seen from last year that are similar, but again, I try to re-educate as much as possible. But an HSA account is made up of 2 components. It's made up of an HSA compatible health plan, which is guided by the IRS guidelines. In addition to that, you go to either your favorite bank, or as we're going to have a solution here that we're going to show you, that we're going to have an HSA company that we're going to utilize for everybody as an employee who wants to participate in this. And it's a very simple solution to use, and something personally that I've used for the last 6 years called Select Account, and I will get to those screens in a little bit down the road here. The way I always describe an HSA account or a PPO health plan account like that is, instead of paying 100% of all the premiums to the insurance carriers like we do with standard PPO plans, we are going to give them less money to the carrier because they have, I'd say they're rich enough over at the insurance carrier offices and all that. What we're going to do is we're going to give them 80 to 85% of the premiums, and we're going to keep the additional 15% or so of the premiums and put them into this other account that we're going to open up to help us pay, again, for future medical, dental, and vision expenses. And the government says, if you do that, I'm going to give you some tax breaks and incentives to do that in the first place. So as another screen that I've kept on here for many, many years, this is one of the best financial instruments that you can see out in the marketplace today, where you do not have to pre-fund any of those HSA accounts whatsoever. You can wait till you have that service and then put the money in the day you either are going to have a service or the day you're going to pay your first bill for your services. And usually, typically, when you go to a provider's office, you're going to have, you're not going to pay anything while you're there at the doctor's office. It's going to be rerouted through the system. And then 30 days later, 35, 40 days later, you might get an invoice that says, here's how much you owe that the insurance carrier did not pay. And at that point in time, you're going to pay with it for the funds that you have at that very moment. First question we typically will get is, how much money can we put into those HSA bank/trusted accounts? And the answer is, in 2015, we can put up to $3,350 for an individual or $6,650 for anything above an individual person coverage. And if you are 55 years or older, you can put in an extra $1,000. And if you have a spouse who also is over 55, then each one of you can open up, or you should have 2 accounts total, but each one of you then can put $1,000 into each one of your accounts. So that if somebody who has a family with 2 55-year-old or older parents, let's just say, then how much can we put in? We can put a total of $8,650 in 1 year and we can get a tax break for doing that. And our contributions, just like a typical IRA, can be made all the way up to April 15th of the following year, right? Who can contribute to your HSAs? We know that you can as an employee. Your employer has decided that they're going to be generous and provide you with a HSA contribution gift into your account, in addition match, and in addition to that, you can have other family members also put money into that account if you choose to do so. Now, either you're going to do this on a pre-tax basis, or you can do it on an after-tax basis, or you can do it on both. If our employer is allowing us to take money out of our accounts and put them into these accounts, then you can do it on a pre-tax basis, which is great. If you decide later that you did that all year long and you wanted to put some additional money up to those contributions, you can, and you can receive a deduction on your personal 1040 tax return for doing that. Again, here's the accounting person coming out in me, and here you're going to see the 1040 U.S. federal tax form for 2014. I have highlighted on line 25 a health savings account deduction box or line item, and there, for every time you don't use the pre-tax method out of your own check, if you put any additional money or all of it comes out after tax, then you can take that deduction at the end of the year and have it reduce your adjusted gross income by the amount that you put in. Again, there are limits to that, as I showed you, but the bottom line is you can get that advantage. And remember, it is the amount of money that you contribute into that bank account, not what you spend out of it. That's how much money you put in, not what you spend. There, in addition to that, when you do your federal tax return at the end of the year, you're going to have another form. It's called the 8889. It's a fairly simple form. I've done it many times so far, but it is an accounting of how much money you've put in, how much money you've spent out, and how much more of a deduction you might get if it wasn't done on a pre-tax basis. That's what that form's going to provide you. In addition to that, you're going to get two separate forms from this company called Select Account, which is considered to be the custodian for your HSA money. This one's going to be the Form 1099-SA, which is the amount of money, and box number 1 says gross distribution. This is the amount of money that's going to be spent out of your account. So as you accumulate invoices, you're going to take those invoices, and at the end of the year, when you get this form here, I would staple it all together. I would put it all together and keep it in your tax file to show you what you've spent your money on. Hopefully, you have spent it all on either medical, dental, or vision expenses and not a car, a television, or a bike. So you understanding that you have, this is a record-keeping tool here that you're going to want to keep for just in case the IRS decides they want to come and visit you one day on your tax return. The second form that you're going to receive is called a 5498. That's the total contributions you have made during the particular year. And you're going to get this at the end of May, and most people like to get their taxes done at the end of kind of the middle of April 15th. So this is just a document that you're going to get probably after you get your taxes done, but you have the ability to find out at any time from Select Account. As you go online, you can say how much were my contributions during the year, and you'll be able to figure that out and use that number to fill out your tax return if you need to have that done. Again, the total contributions are what gets you your deduction. I always share that there are certain options here that says that you cannot open or contribute to an HSA on certain occasions. If you have a spouse that has a flexible spending account, then that flexible spending account becomes your financial tool to use for medical, dental, and vision for your entire family. So if a spouse has it at a different work, if it's hers or her job, then the bottom line is you cannot contribute to an HSA plan here. You can, however, If you are, let's say, enrolled here as a standard PPO plan and your spouse has a flexible spending account plan, yes, you can spend your money out of that flexible spending account to spend on anyone in your family. And that's a very, very important and a very common question we get. The other options, people who are enrolled in Medicare cannot open or contribute to an HSA, but they can opt out, but most people do not do that because Medicare does provide us with some quality and strong benefits for the health insurance side. If you're claimed as a dependent on a tax return, for example, like your children, you cannot open up an HSA account for your children. Or if you're also receiving benefits from the VA or the TRICARE, those benefits are so strong, beneficial, that they do not meet the HSA guidelines for contributing. So again, the basics that we have here: deposits go in, or deposits into the account are tax deductible. The interest that you earn on it is tax free. We all know that nobody is earning lots of interest money these days on any of the accounts they have. However, the most important thing is it is tax free. The biggest advantage that I keep telling everyone or sharing with everyone is that the contributions that you put into your HSA are yours forever. They roll over. It's nothing more than another checking account for you, and that money is under your control. On an FSA plan, that money is a use it or lose it on an annual basis, and then you're kind of predicting about what you're going to spend your money on at the end of the year. You got to finish up your FSA money. You try to spend it on glasses and contact lenses and whatever else you need it for. But the bottom line is an HSA doesn't offer or put you in that position to have a use it or lose it concept. It's there forever. It's your money. We also will be using a debit card. And my HSA and my select account HSA provides me with a debit card. I use that debit card when I go out to retail shops for prescriptions. I use it when the doctor sends me an invoice and I call up the doctor's office on the phone and I say, I'm ready to pay it now. Here's my card number. We're done. So it's pretty quick, pretty simple. The most other important thing is that your account that you have, your HSA account, is portable. It's yours forever, and it moves with you no matter where you go, no matter where you work, no matter where you're at any point in time. I always tell everybody when you buy any services, whether it's medical, dental, or vision expenses, you know that you have to purchase those and not go out and buy television sets, cars, and motorcycles and things like that. And the important thing is that you're going to be, if you do decide to do that, you will not only pick up the income of what you spent on that, but you will also get taxed with an additional 20% tax on the money that you pull out. So they're pretty strong with that tax. So you're going to want to use the money in that account just for those qualified medical, dental, and vision expenses. Very common questions we have are what is included in here, and this is a list that I included last year on our slides. Anything medical expenses not covered by your health plan, dental, vision. The only over-the-counter item that you can purchase are Band-Aids or bandages, those kind of items. You also, at some point in time, have the ability to pay for your Medicare premiums, Part A, B, and D, which is good because some people will say, oh, I'm accumulating all this money, that am I going to use it someday? The answer is yes, you will use it someday at some point to use it for either of those qualified medical, dental, or vision expenses, or we can start paying our Medicare premiums with it also. Some non-qualified medical expenses are anything that is over the counter you cannot use. So anything that's prescribed, or if you have, like, for instance, vitamins that I say unless they're prescribed, you're going to want to ask your doctors, and I've done this before. I've asked my doctor to prescribe me vitamins. And he says, well, why do you want me to do that? And I said, well, because I want to use my HSA money to pay for it. Can you do that for me if you think it's a good idea? And, of course, the doctors usually are pretty willing to accommodate you when it comes to putting in things like multiple vitamins or something like that to help you. The other non-qualified items are teeth whitening, other things that are more cosmetic driven than you cannot use your HSA money for. Before I even talk, let's see, I'll hit on the prescription drug programs. Any of these are ways for you as an enrollee in an HSA plan to help control some of your prescription costs. Some of the big houses like Walmart, Target, Sam's Club, Meijer, Costco, all of them have very competitive pricing on prescriptions, as well as very small dollar amounts for both 30 days and 90-day supplies for a limited number of prescription drugs. I highly recommend looking into those as you look for ways to find prescription drug options for yourself. And this is really important when you're on an HSA, because we all know that you can have a drug that can be very costly, and we understand that. And typically with Blue Cross or any type of HSA plan, you're going to get about a 20% discount off of the retail price of a drug. So if a drug costs $100, most likely you're going to be paying $80 for that drug instead of maybe a smaller copay of $50 or $60 or something like that. So it's important for us to find ways of where to purchase these drugs. There is one slide that I don't have on here that I wanted to share with you because it's something I get asked once in a while, and that is, can I buy drugs from Canada? And the answer is, yes, you can. You can buy drugs from Canada, and a lot of people look to Canada to find their drugs because they're the same exact drug purchases as they have here. That's the important thing. However, the only limitation you have is that you cannot use your HSA card to purchase drugs purchased outside of the United States. That way, they're not going to give you the deduction for that. So keep that in mind, and I know people will look into Canada, and there is a site called Canada Drugs Online, and I recommend people looking at that because you'll be surprised of how inexpensive some of those drugs can be when they're purchased even outside of the country. And again, this is no commercial for that at all. It's just something to make you aware of because I understand the high expense of what prescriptions can be for someone. I also have a great personal example that I want to share with you. There is something called RX home delivery alternative companies that are out there, and there's many, many, many of them out throughout the country. And all they are is distribution houses of prescription drugs. There are 3 of them, which I just put up here, that I know that I've had either current clients or myself has dealt with it personally. And you can see the 3 names that are out there. And I'm going to give you an example. I went recently to help out get 2 prescriptions for my daughter from a dermatologist. And so they said, hey, the doctor said, I'm going to call that in for you. You go over and pick it up at CVS. And I did. I walked in the door at CVS, and the CVS person says, by the way, you owe me $435 for these 2 prescriptions. And of course, I have an HSA plan, and I'm going, oh, that's $435, way too much money for me to spend on that type of stuff. So I walked out of the CVS without the prescriptions. I contacted my physician, and I said, here, there's no way that I'm going to spend $435 on 2 prescription drugs. So they said, okay, let me help you out with this. We have a relationship with this RX home delivery pharmacy company. The one was called Bluegrass Pharmacy. So that's where you see in the 3rd example. She said one of the drugs, which cost about $235 for the drug, they were going to charge me only $75 if I purchased it through Bluegrass Pharmacy. And I said, only $75 instead of $235? I said, sign me up for that one. And I did. The second drug that I went for was supposed to cost, whatever the difference is between $430 and $285, whatever it was. And she said, the second drug is not going to cost you anything. And I used my insurance for it. I said, it's going to cost me $0. So I came out of buying 2 prescription drugs for $75 for that month's worth of supply, which originally would have cost me $435 if I did not do my homework on contacting my physician. So it's very important that you communicate with your physicians and you tell them when you're on an HSA plan that I don't have copays like some of the standard PPO plans in the marketplace. This is a great example for a doctor or physician's office to say, okay, we have a relationship with company. Please help us out and figure out how we can do this. There are also coupons that you're going to find out that are online for many of the insurance, I should say, and many of the prescription products that are out there. Always look into those. Have your doctors recommend those coupons, and they'll give you usually a limited number of something for a specific dollar amount that doesn't go over $25 or doesn't go over $50 or something on that note. Select Account. Select Account is the HSA administrator that we have recommended to Providence. That account, and you can all look online at selectaccount.com if you choose to do so. We're going to set up an employer-driven portal for Select Account, so whoever wants to join this plan will notify your team there through Karen, and we will have that account set up for you and moving forward. It's a great resource. It's a simple resource. I use it. I transfer money from my checking account to my HSA account. I go back and forth if I ever need to do so. Sometimes I don't have my HSA card, so I have to use my regular Visa card when I buy something. I go home and I transfer that small dollar amount for that prescription into my HSA account into my checking account, I should say, and done that via just one simple click of a button. Great resource, highly recommend it, and that's part of the whole HSA world. There are a couple of pieces to it. As you can see, you're going to get that debit card. You're going to pay out of the pocket with online reimbursement capabilities, which is also very nice. There's also an online bill pay option if you choose to do that. This is managing your HSA, as we say, with Select Account. You can view your account 24 hours a day. You can make contributions. You can make payments. You can put claims through. You can do whatever you can to help to manage your specific needs through the HSA account. So that's going to be it for the HSA side. I hope if you have any other questions, I want you please feel free to contact us to talk about those. We're here to be a resource for you, and we believe it's a great solution, and it fits best. And I always want to tell people where it fits best. It fits best for the people that are using their plan on a very minimal basis, because they're able to put money away and get the tax advantage to that, and they're only using their doctor's offices to be there for your preventive care. And as we all know, the preventive care is covered at 100% when you go in for your mammograms, your visits, your blood work, your anything related, your EKG, all of that should be covered at 100% when you go into the doctor's office. It's also a great tool when someone is very, I should say, unhealthy or using their plan a lot, because they're going to go through that deductible very quickly, and then the remainder for that year typically is going to be covered at 100% or at 80% up to a certain smaller level beyond that. And so very much want to consider it's the people that are in the middle that are going to want to work on trying to build up their HSA account to help them pay for future medical, dental, and vision expenses. I'm going to have Taylor come back in, and he's going to go over some of the ancillary benefits and get you updated on those.
Thanks, Logan. Just so everyone's quickly aware, all the other Providence management benefits, the dental, the vision, the group life, short and long-term disability, and voluntary dependent life have all remained with the same carriers, and then we're not subject to a rate change. So quickly, we're just going to go over, since it is open enrollment, if you are currently not enrolled in one of the plan options that's available to you, this is the time of the year where you can make that election. For example, if you were not enrolled in dental in the prior year, you have the opportunity to enroll during open enrollment with an effective date of June 1st, and that will be for the remaining year. So quickly here, Delta Dental, there are two plan options, one with a higher annual maximum or benefit for each member. So with that being said, the dental option in network annual maximum would be $1,200 on a calendar year. and this is for each family member. This is not a family maximum, it is an individual maximum. Whereas the dental plan number 2 would have a $1,000 annual maximum. This is the maximum amount of claims that Delta Dental and the majority of all other carriers will set a maximum per calendar year. Okay, again, per calendar year. All preventative services when in network is covered at 100%, just like the group health is. So your twice a year annual cleanings and once a year annual x-rays. Again, this is for each family member. The individual family deductible or the deductible for the dental high plan option number 1 has a $0 deductible. So what that means is if you go in for basic or major services, you are not the moment you walk in, you are not going to have a copay. Whereas on the dental plan option number 2, you'll have an individual deductible of $50 for anyone that's above an employee only. The deductible would be a family deductible of $150. However, it's $50 per family member. So if you have a family of 4, the first 3 family members that go in for services other than preventive will have a copay of $50, maximum of $150 for the entire family. Therefore, if you have all 4 family members going in for services besides preventive, basic and major services, the first 3 family members will have a deductible of $50. That 4th family member would have no deductible for any future basic or major services. There is a orthodontia coverage at the bottom there, and that is $1,200 for the dental plan number 1 and $1,000 for the second dental option. I do want to note that this is a lifetime maximum, not an annual maximum. So with that being said, each family member would have a annual lifetime maximum for the family members. Again, just like Blue Cross Blue Shield, we advise everyone to make sure that their dental provider is considered in-network. It is a national network, even though you see Delta Dental IL. This is Delta Dental of Illinois, but once again, a national network, and you can look up your provider by going there. There have been instances where we've looked up a dental provider and they did not show up in the search. However, when I called the dental provider, they did inform me that they were considered in the Delta Dental network. So always advise to make sure that your providers are in network, as you'll be paying the least amount. As I said, Delta Dental is the largest dental PPO network in the country. So just wanted to give some brief support that it is in fact a large national network. We also have group life, which is 100% employer paid to the employee, voluntary life for employee, as well as voluntary life for a spouse and or dependent children. Also, there are short-term and long-term benefits that are also known as, or sometimes named in the market, payroll insurance. Should you become disabled due to an injury or an illness, you will receive benefits during the time you are unable to come in to work for Providence. So nice benefit um, with that. As I previously said, there's group life, which is 100% employer paid, as well as accidental death and dismemberment, should of $50,000. So briefly, should you unfortunately be morbid here, pass away due to an accidental death, your beneficiaries would receive a benefit of $50,000 as well as an additional $50,000 as it was deemed an accidental death. So nice benefit, employer paid. Don't have to worry about enrolling in that. Everyone is automatically enrolled. Then you have the option to what is voluntary group life on a buy-up basis for your employee, spouse, and dependents. So you have a guaranteed issue of an additional $100,000 group voluntary benefit, which would be 100% employee paid by the employee, but guaranteed issue, no medical underwriting required or an exam prior to being approved. Then we have what is called the employer paid short-term disability. Should an employee become disabled for a short period of time, which is 90 days, you will receive 60% of your weekly earnings up to a maximum of $500 per week. So with that being said, after being deemed disabled from elimination period of 14 days, essentially what that means is that you could not work for 14 days due to an injury or illness, then your benefits would be subject to your benefit of 60% weekly earnings. After the 90-day elimination period of the short-term disability, should you still remain disabled due to a injury or illness, after day 91, long-term disability would kick in, and you would receive 60% of monthly earnings up to a maximum of $5,000 per month. Again, employer paid. I do want to mention that if you do elect to enroll your spouse and or dependent children, that is completely up to you. Your voluntary life buy-up option, you will have the option to elect either the voluntary life and or accidental death and dismemberment. You can elect both, or you can elect one, or you can elect neither. In order to elect accidental death and dismemberment, you are required to enroll in the group life. That is the only stipulation. You will also have the option of buying the voluntary life on a $10,000 increment. If you would like $100,000 of the voluntary life, you can do so and elect a different amount for the accidental death and dismemberment. I had briefly mentioned that during an open enrollment period, you will have the ability to elect your coverages. I should say you will be required to either elect to take the benefit package available to you, choose the elections of your choosing. This will be all shown in a online enrollment software, which is available strictly to your group. You will see all of the plan options, all the benefit options that are available to you on the website, and what the per pay period benefit or contribution you will be responsible for. The last thing that is offered with Unum, that's your voluntary group life and disability benefits, they offer an employee assistance program which assists employees in a time of either financial need, stress, grievance, as well as legal. I urge you to check out the program. You can go to the website, which is the second bullet point, lifebalance.net. You will see a location where it asks you for a username and password. Both the username and password are Life Balance. Again, Life Balance. It's once you are logged into the website, you can see the benefits or the programs that they offer to the employees on a majority on a free basis. There are some legal and financial consultations that there would be a fee for service. But again, check it out. It's of benefit to you as the employee. Lastly is the vision insurance with BSP, also a national provider. Again, you can view the full plan summaries and benefits once you are logged in and you see the benefits on the Enrollment software. But briefly, here is the pages of what is covered on an annual basis for the vision. And then lastly are what the rates would be on a monthly basis. However, again, once you are logged into your enrollment election website, you will see the per pay period monthly premium contribution that you would be responsible for all benefits. Like I said, enrollment software, we are using a new software which allows everyone on an individual basis, no one else will be able to see your information. It's also the online enrollment software is brand new. It has the capability to show employees all benefits, all plan summaries, and this is the location where you will be making your open enrollment elections. This software, once this call has concluded, will be sent out to each employee with login information to see your benefit package for 2015. I will mention that the deadline to make individual plan elections is next Wednesday by the end of the day. You will be able to know when you have conducted your online enrollment. Lastly, this webinar will be posted on the Providence Management Intra site. So if you have any questions, the PowerPoint is up on the intranet site, and you can replay to this message or the PowerPoint presentation probably later on tonight, if not tomorrow morning. And as I mentioned, we will be holding 4 employee Q&A sessions over the next week. At this time, I'm going to hand this back to Logan to conclude this meeting.
Thank you, Taylor. I hope everybody was able to get at least enough information to help them through this process. And like I said, we're here as a resource for you. We're here to help you make the best decisions for yourself and your families. And so feel free at any point in time, again, to get in touch with us or be on those question and answer sessions to help that particular case. The only ending that I put through on some of these presentations is kind of an infomercial, in that our benefits and financial services team does a lot, even outside of just the group benefits, that we can help each individual employees and their families with certain financial planning, life insurance, which comes up annuities with those products specifically. We work with those. Long-term care insurance, there are a multitude of options that you can look to from long-term care, and most of us probably don't even have a long-term care policy in place. Disability insurance, you have those in place, but there's also supplementals to those. And then one of the biggest ones these days is the identity theft protection service that is put out by a company that we use called Legal Shield. And I know everybody on this call has heard several occasions over the last few weeks or months that somebody has had their identity stolen. And so this is a great service that we recommend that helps you not only protect yourself, but also helps clean up any claim issue that may come about. We also have a personal homeowners and auto umbrella company that I told you about that can help with those particular lines of coverage. And again, any kind of an idea for quoting or purposes, feel free to give us a call. We'll help you out with that and find you the best solution for your families. That's the end of and we'll conclude this presentation. We hope we're going to help you out in any way we possibly can. And also, Karen, if you wanted to say anything at the end here, that's up to you.
Yes, and thank you both, Logan and Taylor, for this information. Insurance is confusing. We know it. We've been living and breathing this for months and months, getting this ready for everyone, and we're excited about the plans that we're offering. And as you know, we started our wellness program this last year, and we had great participation in that. And so the idea is to have everyone take responsibility for their own health and wellness, which helps lower your own premiums and lower your out-of-pocket expenses. And so that, in combination with these great plans, I think it's a good offering for all of our associates at PMC. And as we promised, when you get your open enrollment information, it will have whatever rate, whether you're in the wellness rate or the non-wellness rate, depending on if you completed those wellness incentives that we had set up last year. So they're already pre-populated. Jennifer Bauer at Amcheck is going to be sending out those emails to everyone hopefully today or first thing tomorrow, and you'll be able to go in and go online. But all of the rates and everything is already on our website. So feel free to take a look at it and let us know if you have any questions. All right, well, thank you, everyone, for your time. We went a little bit over an hour, but there's just so much information in here. And I hope you have a great rest of your afternoon. Bye-bye.
Thank you.